learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in October 23rd, 2020, and the stock market is going to rally off of vaccine news. And we need to talk about the best way to trade options during earnings. We have a lot to talk about even after hours, but it happened during hours. We got news of remdesivir getting approved for coronavirus treatment. That's Gilead's drug. We've talked about this a long time ago, but it leaves me with the theory that I want to talk about. Its interesting effect on the market. We may see that virus run return or that vaccine stock run up that we've seen in the past. But tomorrow should be interesting. We're wrapping up earnings. We saw Intel. We saw a few other companies, even some really big moves today, not related to earnings. So we have a lot to go over. I got the plays, I got the keys, and everything we're looking at for the Froggy Friday tomorrow. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/the stock market. You can post the plays, see the plays, watch the watch list come to life. And yes, if you want to see a long-term strategy executed better than Mr. Beast and Wall Street Bets, we are the place to be. But we love you all. No shade. God bless you. And the most important thing you need to do, post your watch this below. Let's know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off the bat, first thing is tomorrow is going to be very crucial for stimulus. So even though the market may rally off this Gilead news and we may see an effect, we also saw some murder news. I think that's probably where I should start. We'll tie it into the stimulus, but I'm expecting some of that vaccine run up. We saw this earlier in the year. Every time Gilead, Johnson & Johnson, AstraZeneca, you saw a 2 or 3 day rally on positive news. So it seems like the market's taking this positive. It's interesting how the news traded on this, but you also saw news from Myrna as well too. So I think this is going to be interesting because with 9 or now 8 or 7 trading days, I don't know, pretty much just one full trading week left before the election, this may be the counter news to any of the negative stimulus stuff. So that has my attention. I want to see how that plays out tomorrow. We want to see if it's the pop, lock, and drop it, or if the S&P moves like a biotech. Does it have the gap up and then just sell off throughout the day? So that's the first thing. As far as now what happened today, there was positive comments by Pelosi, or was taking very positively. It was interesting. However, tomorrow is going to be very crucial. Again, she has said the process, she said the plan, and I'm kind of sticking to this. If you don't get any sort of movement on this deal and it stays the same tomorrow, then we are not getting anything for before the election. And then the question is going to be, is how is the market going to take that up until then? Or, even if they play this game back and forth. So although there was developments, we are in full on earnings mode. That wasn't enough to shake the market. And now next week, that's when all of the big companies are going to start to report. If anything, the market is going to react to that. So we will see what happens. But final part to talk about, it's a Froggy Friday tomorrow. You've already saw big earnings moves and surprises. Again, all this stuff we've been talking with pricing and all that. There's going to be opportunity, and we even have a little strategy we could use. Unfortunately, if you have Robinhood, it won't work on Fridays, but we do need to talk about the broader earnings. So I hope you're ready. I hope your head is in the game and your balances are in control and budgeted, but that is pretty much it. So let us get into the plays. So right off the bat, a lot of things we need to talk about. I have 3 different plays. One of them we have. Another one, we have an old one, but these are graveyards coming back to life, and the other one I do not have. I want to look at AMD for a frog tomorrow, considering Intel's earnings and how it's reacted. It's looking very good, but we saw a reaction last time. Remember, we played this exactly the same last time, and there was a small movement with the options, then they decayed right before the earnings, and then they popped into AMD's earnings. So what I'm saying is watch for short-term plays on this tomorrow, but also be mindful of how you could set up if you want to play this for earnings. So that's the first one. I want to see if there's any sort of earnings spark again coming into next week, even with what we saw with the social media stocks, especially Snapchat today. Going to be watching Facebook to see if it kind of has that continuation and goes from there. And then finally, Gap. They came back today, and I think this news might go around. I think it's interesting, and it even moved up a lot. We still have all of those shares. This is that Mr. Beast WSB play we're talking about, and I think it's actually good to kind of even show you guys this because it's a really really good example. If you guys remember, this was a play that we made because, one, we liked the Kanye news. We liked where it was setting up. Again, growth value, all of that. Even remember where it was at when we bought it. We picked these up at $13. But what I did, and we actually did this today on another play I'll show you, but I bought 1,000 shares of Gap at $12.98. About a month and 10 days later, it shoots up, and I was able to sell 750 shares at $13,000. So you can see right here, we collected more money than we bought it for, but I didn't have to sell all the shares. So I'm remaining with 250 shares for free. We've been holding them, and then they've been gaining for us. So I also did that with Snowflake today too. If you guys remember the Snowflake IPO, we did something very, very similar. I bought it in multiple orders. Here's the Snowflake history. We did it in 3 orders. If you guys remember how we scaled in when we did this play live, 3,000, 2,000, 2,000. So that's $7,000, 500 plus 400. That's like 7,900. And then I sold 27 shares back today for 7,887. So I spent a little bit amount of money, but now the best part is I just have 3 of these shares for free. So less than $1,000, but now you got to play an IPO for free. This is the free option strategy, but you're seeing it with shares. And now I'm bringing that up because we own Gap and we've had a lot of plays. I'm watching the shares go up. I want to watch how this news plays out. I think the market will continue to digest it, kind of think the momentum you saw with Snapchat. And remember, the reason why we bought them is that they were really, really struggling at that like lower level here. So this brings them to an interesting point. So I want to watch if the market goes crazy, watch them for frogs. But now those graveyard option plays are coming back. So that means they're expensive, but if there's any decay in Gap, you will be able to take advantage of that. So what I mean by that is if you actually start to see it slow down, some of this IV and these contracts might drop. So here are the old Gap 45 calls we had. Bottom at 5 cents. Remember, they held up at that same moment when we took the shares for free. I still held on to these. They doubled in value, but they dropped. They've kind of really been dead in the water, but now you're starting to see them kind of come back to life. So I think there will be a lot of opportunity on that chain. So I'm going to be looking out for them. And that's it as far as those plays. As far as everything else, I did make a lot of plays. And now to talk about the main point, here's what I did with Intel. And what that is how to play options this season. So here's what I'm doing. And this is my theory that I think is going to work out best because we've talked about the UVXY. Pricing has been weird. We haven't seen too much follow through with options, and we've still seen surprises even though the market maker isn't pricing in a lot. So I figured, hey, if we have Robinhood or on a Friday, you can't use them, but I want to take advantage of the dirt cheap contracts, the ones that are really, really low probability. And my logic is I want to scatter the seeds, but keep it really, really small because some of these surprises could return big gains if you hit them. We have a lot of opportunity considering everything that's happened this year, how stuff has moved. So I want exposure. So I did these 2 plays on Intel. I played it both ways for about $60, but then I did STX. I bought a $5 contract and then I bought a $5 put as well too. We did it both ways, and that's pretty much my logic coming into any of the earnings. What I want to look for, I want to find these cheaper plays. So whether it's Intel, even tomorrow for the continuations, kind of like frogs, but think for earnings. But I want to buy them as cheap as possible, and I think I can't go wrong if I do $5 on each side, literally $5. So if you're able to play $5 both ways on some of these companies for earnings, even though it's gonna, again, these are the lowest quality plays. Do not try this. It's not a recommendation. This is what I'm going to be outlining, but this is what I think is going to be the best for me this earnings season. So I'm going to be going with that strategy coming until next week until we start to see big reports and could get an idea of how the market's shifting. So applying that in theory, keep watch of all these companies and pay attention to some of the cheaper options and see how they hold up. But as far as everything else, I will watch GILD tomorrow. That could be a potential continuation. Like I said, AMD, DraftKings. I rolled this play over again. So pretty much it's the same situation as last time. And since I was at max gain, it was about $18,000 max gain. But the difference this time, I rolled over before Friday because the contracts I had expiring, those 40 puts, my insurance, they were actually up. So I said, hey, if the stock bounces from here, I'll lose some of that collateral. So I was able to get 30% gain on the $1,500 insurance. But then I noticed there was a lot more premium available on the Novembers, and I could still walk away with credit. So we kept it up there. I turned that whole DraftKings play into the same thing. I still got $19,800. Our initial credit was $2,800. Then it dropped to like $1,800 from the last rollover. So I'm actually able to walk away with the same amount here. I would say a little bit less, maybe give or take like $300. I'm going to account towards slippage, but it's not anything that would really change the overall idea of this play. But now I have till earnings. It's still the exact same play, but now I rolled over with a lot of time. So if it bounces prices up fast. I won't be able to secure the profits as quickly. However, I could pretty much now just guarantee this position into earnings, or at least have earnings to even potentially save us. But again, the idea of this rollover is I was able to just refinance the trade, stay in the position for more time, and it cost me nothing. So it makes more sense to roll this play over than to not. So still holding that, but DraftKings did very good. Snapchat kept shooting up. Tomorrow will be key, especially as a Froggy Friday, because if it does break 40 and go crazy, that could be a frog. I closed out of that Netflix play. So if you guys remember the earnings play, we needed it to go below 482, 485 is where we sold the top end. So what I did with that play, I ended up closing it. There it is. At $1.33 credit. So remember, we got $2 credit. So you're able to get like 70 cents per contract on 10 contracts. It's about $700 of the 2,000 max gain profit. Release our collateral. So not too bad for that earnings play, but I closed out of it just because it expires tomorrow. So the minute it started falling out of the money or below that 485, I started to see gains. It was only 30% gain, but I figured I'd take it because if it didn't keep going or it bounced up tomorrow, we would take the loss because this play is in the money and it's already losing. So that's why I was more quick to want to be able to take those profits. So watch them. As far as everything else, again, any of the other continuations, STX, Intel, I like Gap, watch Snowflake. I already explained that, but this is at an interesting and level. And like I said, why? Because it's an IPO. This one's a low float company. So I got my 3 shares for free. We'll just ride that there and then watch Apple. I want to see if the Intel news affected them in any way. But now Apple as well as Facebook, just see if they start to get that earnings run up. And now the next key will be if we're going to really see that vaccine rally, or if we're going to see anything coming into the election, or if it's going to be kind of a pop coming into the run up. Watch the UVXY to confirm it, because even though it looks like it's at the bottom end, there is still a long way to go. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And remember, if it can't flow through you, it won't flow to you, baby. But the Cole loves you. I love you. We'll see you in the morning. Let's go.